and welcome to Sky's the Limit. I'm your host Sharmeen Ali. Today we have with us a very accomplished guest. His name is Mr. Yasir Ashfaq. He is the CEO of Pakistan Microfinance Investment Company. He has also played a huge role in development of the microfinance industry in Pakistan and is renowned internationally as an expert in running a microfinance institution. So let's welcome our guest on our program today. Thank you so much, Yasir Sir, for being with us today. It's a pleasure to have you, and I know that we can learn a lot from your knowledge in this industry and the role that PMIC, Pakistan Microfinance Investment Company, is playing in building up this field, because we know how much microfinance benefits the poorest segments of society and helps in poverty alleviation, and that is one of the goals of every Pakistani, and especially the current PTI government as well. So let me just start with you. Before becoming the CEO of this organization, your journey, you're from Islamabad, so we all know as Islamabadis what kind of life that is. It's a very easy kind of a relaxed life, very, very pampered by our parents. So you went into finance, you're an accountant, right? And you went to local schools over here. Tell us a bit about your childhood like that.
So yeah, my father moved here in 1975, and but we did go to many others. I mean, lived in many other cities. So we lived for 4 years in Karachi. My father was posted there. Before that, almost 2-3 years in Mirpur Azad, Kashmir.
Right. And he was a bureaucrat? Was he?
He was, he was a bureaucrat, but after his retirement and even during this, I mean, he was a man of letters. So he has written almost 7-8 books, mostly history, philosophy, and he just passed away last November. Ishfaq Sini Mirza, I mean, many people know him in Islamabad circle, and so I mean, he had a very strong influence on us and our grooming, along with my mother, who was always a housewife, and the kind of loving housewife for the kids. And so we spent, but whenever we went outside Islamabad, we came back, and since 1988, almost we're living here. My professional life, for one of the jobs that I was in a commercial bank, I lived a few years in Peshawar as well.
Okay.
And then a couple of years in Karachi as well. So,
right.
But then now, since almost 2008, I am based in Islamabad.
Right. So you went to one of the model schools in Islamabad,
yes.
And then you became an accountant. Where was it that you had your education for your bachelor's before you went abroad?
So I did my bachelor's from Islamabad College for Boys.
Right. Okay.
And
I didn't even know they had bachelor's, but okay.
Yeah. No, at that time, I mean, those were the model schools and the government schools where most of, because there were private schools that they started. I mean, some of the private schools did start operating, but they were, I mean, the kind of teachers that we had. I also studied in Kent Public School, Karachi, and the kind of, the teacher and their, expertise, their qualification, and also their, the way they used to teach was, I mean, it was remarkable.
And it really contributes to your grooming as well.
Of course it
right,
does. And most of the people, I mean, the top bureaucrats and everyone who lived in Islamabad used to send their children there. And the quality of education at that time, especially in the model schools, was pretty high. So then, after completing that, I entered the Institute of Cost and Management of Accountants of Pakistan, did my, but even before completing that, I started working, because as a professional, accountant, you are supposed to work for 3 years before you actually get the certification.
Okay.
So normally after part 3, at our time there were 5 parts, I don't know how now there are 6-7 parts. So this, I'm talking about 94, 95. So After doing that, I joined a commercial bank, and for almost 7-8 years, I was working in finance and treasury departments of the Bank of Khyber. At the time, in 2004, I was made the acting head of treasury, and then but you know, at that point in time, you know, I was totally not satisfied with what I was doing professionally. So that's why I left the job, went to Australia, University of Sydney, did my masters, because I wanted to contribute towards you know, the development sector, working for those segments of the society who are underprivileged.
So you studied economics over there.
That's
and what was that experience like, studying in Sydney after Islamabad?
It was a wonderful experience in almost all aspects. It's a very, you know, cosmopolitan city. Not only that, I mean, people are very welcoming. The university, it's a great university, one of the first, in fact, the first university of Australia. The faculty was very, very, you know, they were experts in their field. And otherwise, I mean, it was a welcoming city. So I really enjoyed my stay and met a lot of people of different, you know, nationalities, and so.
And then you came back and you joined the microfinance industry at that point, or was that later?
No, it wasn't too easy to join the development sector. So I, you know, wandered for 2-3 years, again in investment banking and certain other organizations, and finally I got an opportunity to head the microfinance department of Pakistan Poverty Alleviation Fund.
Right.
And that was, I think, in 2008.
Right, and that
March.
is one of the key organizations that works on poverty alleviation. Right now they're working with the SARS program. So just to give an idea that is, you know, one of the main
Pakistan Poverty Alleviation Fund was formed in 2000 by the World Bank and the government of Pakistan. And the objective is to promote, you know, non-government organizations to work for development and in different fields, from microfinance to, you know, schools and health and small infrastructure schemes and those kind of work, and building institutions of the poor.
Right, exactly. And microfinance plays a key role in development, and especially where uplifting of the poor is concerned, making them stand on their feet, etc. So can you just, you know, describe that a little bit for us?
So in Pakistan, there was hardly any microfinance when PPF started working. So the role was to build the institutions first, along with provision of the financial services, what you said. And objective was to not only you know, provide funding, but also to train people for their rights and train them in various kinds of enterprises, link them up with the markets. The initial model of microfinance was community-based, group-based lending. And number of institutions like National Rural Support Program, Kush Foundation started their operations around that time, and Khoshali Bank. So they were all following group-based lending, where there was social collateral based on which the lending was done. And right from, you know, rural areas, agriculture, some of the institutions were primarily, even at that time, were focusing on lending to women. So they're almost 100%.
Can you elaborate a bit on social collateral?
So social collateral would be, you know, if there's a group of 15 people, they jointly sort of, you know, commit that they are taking loan jointly, not jointly, but individually, but they jointly commit to repay in case one of the persons is not able to repay his or her loan. And so that gives some assurance, if you're working in a group, that you know, the loan would be repaid. So that's
Right, okay. And you were saying that there was a lot of focus on women. So how did you do that work with women?
So I think the one was the economic benefits that the women would get, but also if you look at the, you know, social justice kind of aspect of it, that it's mostly you know, men who were provided financial services in Pakistan. So we also made it mandatory not only to provide certain percentage initially to women in every organization, because there could be, you know, one organization providing 100% of the loans to women and the other is 0. So we said no, we are not going to work with any organization who would not provide more than 40% of loans to women.
Okay.
And then it's also training of women, you know, in small enterprises, how to run a business. That was also important. So more importantly, we did not only work at the client level, we asked the organizations to start, you know, inducting board members as women.
Right.
Even before the regulators started doing that, we had this you know, part. So it was more of a moral suasion, convincing those organizations of the benefit of having women on the board, because you know, the kind of knowledge and diversity they bring in.
And representation.
And representation.
You know,
and if you want to serve women, I mean, you need to have, even at the policy level, not only at the management level, you need to have women at the policy.
And you're talking about 50% of your economy, 50% of your population. The amount that women, particularly farmers, contribute to our economy is so undervalued that you know, this is something that's very needed to sort of recognize and represent them.
I mean, many people who live in rural area, they would know, but a number of people who live in cities don't know that all the livestock, which is now bigger contributor to your GDP than crops, is normally managed by women.
Exactly, particularly cotton. They're the ones who are going and picking cotton in the fields.
Yeah,
right?
that's the crop sector. But what I'm talking about is the livestock sector. So all the cows, buffaloes, goats are managed by women and children in house.
Yeah.
And even for, you know, cotton picking or, you know, other stuff, in number of when you go into the rural areas, people would know, I mean, the contribution that they are making, and it's not remunerated, but it is
remunerated or often not even recognized.
Yes.
By most of us, we are not even aware of how much that they do.
Exactly.
So it's incredible. And then the uplift of these women, that's also part of the whole program. Make sure that they have good working conditions and all of that, childcare, things like that. There's so much involved.
Exactly. I mean, there are people who say, okay, women are given loans, but normally they pass it on to their husbands, right? And that is partly true. But whenever I go into the field and I talk to these women, they say yes. Sometimes we do that. Sometimes we do utilize it ourselves. But it's not that you know, our role declines, or the men are not, you know, consulting with us, especially if the loan is taken by the women. I was in the field, you know, even last week, and this was the question that there are certain questions that I do ask these women, and they were very explicit that, you know, even if we pass this on for the loan amount for our husband or our son to buy a rickshaw, we still have the power to manage the funding. So they normally, you know, weekly basis, daily basis, come back and, you know, give us the money or income that they have earned during that day.
Right, they repay the loans very regularly. Right, and just explain a little bit about how the current microfinance model works. A farmer approaches a bank, and or whoever, anyone with a small business approaches the bank, and then there's a process of due diligence, and they're given loans up to what amount?
So exactly what you said, you know, initially the due diligence is done, and due diligence is not only dependent on the, you know, the business that they are running. So assessment of that kind of business, you know, So if you're a grocery store, they would look into the amount of items that you have, and then also ask a couple of people around you working, is this, for how long is this business in place, and what is the overall, volume of that business. And then the loan is provided according to the regulations for an enterprise, an entity, be it regulated by Securities and Exchange Commission of Pakistan, or the State Bank can lend up to 350,000 rupees.
Okay.
For normal loans. But for special enterprises and for housing, they have increased this limit up to 3 million.
Okay.
So, but in order
so they do provide for housing as well?
They have started doing that. Even previously, it hasn't picked up because 3 million is not a huge amount, and the ability to repay. For example, in rural areas, people don't take loan to build a house. If they have a good crop, they would incrementally increase their house. Building a new room, or after they get, after they sell their crop. So that's how normally it is done. But in urban and peri-urban areas, people have now started looking into that, and there is no overall, even in the commercial banks, there is not a great kind of culture of lending for or products for lending for housing.
Absolutely.
But it has improved right now, and there's still room for improvement.
Right. So you were explaining how this model works. So then they come and they can get up to 350,000, and this is for is this for starting up a new business, or is it for existing businesses?
So there are institutions who also provide for starting up businesses, but normally it's for existing businesses.
Okay.
Absolutely.
And the process is made easier for them because they're
There's
mostly
no
illiterate also, so they wouldn't really know how to go and apply for a loan, where to go, and what documents to fill. So how do you make it easier for them?
So I think they are illiterate. They can't read and write, but most of them are very knowledgeable, and they are very prudent at times as well. So if you tell them that, you can be given a 100,000 loan, and for example, you'll have to pay 4,000 rupee of installment, or you can take 50,000 and you need to pay, I'm just giving it as an example, 2,000. They are, knowledgeable and wise enough to decide these kinds of basic things.
Right.
So that is made aware because all these institutions are working under the regulations.
And they're working in the rural areas. They can access them in their local towns and all of that.
Of course. There are thousands of branches of microfinance institutions across the country. And as it is said, the service is provided at the doorstep.
Right. That's incredible. And you've played a huge role in the development of microfinance in Pakistan, from what I understand from your work.
That's, I think, an overstatement, but let's continue with that for the time being.
Pakistan Poverty Alleviation Fund, you were in that as well, and now currently in your role in PMIC. So can you please tell us a bit about what do you feel were your main contributions in this field since the beginning of your career?
So when I joined PPAF was providing loans to microfinance institutions. But when I joined it, so I feel that every sector has different requirements based on the level of maturity of that sector. And microfinance sector, I feel, we can claim in this country as a success story, a sector which has actually, worked on very basic economic model where you start a sector with subsidized funding, or you provide lots of subsidies, like we've been providing subsidies to a number of other industries since inception. But this is one of the industries or sector which availed subsidies from the government and now is pretty, sustainable on its own.
Yeah, the level
And the subsidy is hardly there from the government.
Yeah,
They're
here-
contributing towards tax. So my contribution, if you primarily, so when I joined that, I thought that there is a need to improve governance in these organizations.
Okay.
As I said, bringing in professionals, because you cannot micromanage. We are a wholesale lender. We were wholesale lender in PPF, and then we are wholesale lender in PMIC. You can't micromanage each and every organization. If you have good boards, good governance, transparency, and good practices at each institutions, it is easier to manage your risks, credit risks primarily, and it is easier for these organizations to grow and provide financial services. Another thing, I think the formation of PMIC is another, first in this world. Because in a number of countries, the development agencies, World Bank, ADBs, have formed social funds. But their transition into a sustainable for-profit entities have never been done. And credit not only, I played my part, but credit goes to these three organizations, my shareholders, shareholders of PMIC, Pakistan Poverty Alleviation Fund. At that time it was DFID through Karan Das Pakistan, and KFW. So this entity is formed now, not only to utilize funding that PPF used to do, but also access commercial banks and bring in commercial funding, capital markets, to lend to microfinance institutions so they can increase the financial institution inclusion in this country.
Right. So coming back to financial inclusivity, which is very important in order to boost our economy and get rid of poverty in the country, which is very important. There's a general perception that somebody who's a lower income person is not going to return any money that they borrow, whereas the microfinance industry has a very high rate of people returning, paying back their loans. Payback rate is pretty high, right?
Yeah, I think this was the misconception, and the misconception which was addressed by Dr. Yunus and Sir Fazle Abid in Bangladesh initially, and many other countries as well, because, and I think when it came to Pakistan, this has it was no different. People at that level have been borrowing for centuries from the money lenders at exorbitant rate. What microfinance has done is to, because of the regulators and also because of these institutions, has given a lot of respect to the client, provided them funding very respectfully and according to their requirements to improve their lives, to increase their businesses. Every one individual who is part of this world, I think for me, it is that's a basic sort of, one of the basic facilities that they need to have.
Absolutely. Right. And okay, so now Pakistan's microfinance industry is known to be very highly rated in the world. Am I correct? So can you tell us a bit about that?
So our regulations are one of the best in the world. Our overall performance, even during COVID, has been quite, decent. And we, as a sector, have grown at quite a pace in the last 5-6 years. And the kind of, the overall client protection principles and the governance structures that we have within the organizations are, amongst the best in the world.
And can you tell us a bit also about the scale that microfinance has reached in Pakistan? Approximately how many institutions may be serving how many clients roughly?
We are roughly now almost 40 institutions serving more than 7.2 million clients, out of which roughly 51-52% are women. But when it comes to PMIC, our portfolio is almost 85% women.
Okay.
So, but we feel that there is a need for more institutions, And what we also feel that if you compare it with many other countries of much smaller size, they have more than double the number of institutions that we in Pakistan have. And then based on that, what PMIC did this year, our board has approved a fund where we are going to support new institutions in the sector.
Right, okay. So can you tell us a bit about now PMIC? Exactly what is its setup? Because you're not a retailer, you're not giving out the loans yourself, you're saying you're in wholesale banking. So explain that a little bit, please.
So PMIC is Pakistan Microfinance Investment Company. We are an investment finance we have an investment finance company license. We are a wholesale lender. We lend to retailers who ultimately lends to the clients. As I said, we have 3 shareholders. And our objective is not only providing funds, but also to develop sector, to develop new products, to capacitate institutions, to support institutions, new institutions, and to introduce new products. For example, we are currently working on a social impact fund with National Investment Trust. This is going to be a first mutual fund which would invest in the assets of microfinance institutions.
Okay.
And it hasn't been done anywhere in the world. Also, we are approaching capital markets for launching of bonds of microfinance institutions.
Wow.
Then we borrow regularly for commercial banks and onward lend these funds to microfinance institutions. So, but the role is, as I said, not only to provide funds, it's also creating impact in the life of the people that we serve.
Absolutely.
So we want to see their incomes increase. We have indicators for that. We have indicators for women financial inclusion. We have indicators for, reaching far-flung areas of Balochistan and KP.
Really?
And we strive for that. And so these are some of the, our main areas of work.
Right. So how successful would you say has microfinance been in providing access to capital to, the masses in Pakistan?
Microfinance sector, I think, is still growing. And has not reached a full stage of maturity, or what we call in economics is the large scale of economies have not been reached. So there's a huge potential still. But what we have achieved in the last 20 years is very, very sustainable, right? We have grown as microfinance sector. We have grown at a good pace, where we have seen some crisis, but that's a norm in any financial financial sector.
What type of crisis have you seen?
So, there was some delinquency crisis in 2008.
Right.
Then there was some, due to floods in 2009 and 10, there was again some impact. But those have been managed very professionally by the institution. And now during even this one of the biggest crises in our lifetime, of COVID, institutions are now mature enough to manage those crises.
Because you've experienced previous
because of
crises.
Experience of 21 years. And so if you overall see that there's a huge potential, we can serve roughly, I think the market size is roughly between 20 to 25 million. We have reached 7.2 million.
Okay.
We need to adopt more technology, not in the space of maybe assessing the individuals, as I think that needs to be fine-tuned further, but certainly automation of our systems and of our lending and repayment systems especially.
Right, okay. And you're also saying that there's scope for new institutions also in this industry. It's not saturated yet.
It's not saturated because we have not even reached, let's say, 1/3 almost of the potential market.
Right. And which areas in Pakistan do you think that demand is the most?
See, normally microfinance works where the economic opportunities or economic activities are higher, greater, right? So Punjab, Sindh, parts of KP, but in KP we are now working on a Sharia compliant product, and hopefully in the next few months we'll start offering Sharia compliant lines of funding. Balochistan is also, there are certain pockets where we have tried previously, but since the population is spread out very sparsely, it becomes very costly at times. But even then, we are encouraging institutions to go in these areas in KP and Balochistan to improve the financial inclusion.
Right. Okay, so when we talk about financial inclusion, these are people who previously would not have had access to finance, such as women, like you were saying, farmers, and
Yes.
your lower income communities, and that has a huge impact. But there's always one question, that the interest rate that's charged on these loans, is this manageable for people with that type of income level?
You are right. I mean, compared to a big corporation, the rate that is charged to microfinance clients is higher. But there are reasons for that, right? I'm not saying that it should remain the same. There should be all effort. I mean, everyone should make an effort to reduce that. But what is more important? Is the rate important, or is the availability of fund more important? When I meet clients, and I've been visiting microfinance clients for many, many years now, I have never found that they complain of higher markup rate, other than one or two people. If you push them, should it be lower, and then they would naturally say yes, it should be, but their demand is of more funds. And what I feel is, I've studied it myself, being a student of microfinance and a bit of economics as well. So how are they able to pay? My assessment is that the repayment capacity is based more on volume turnover of their products and services, rather than the amount of income. So they're not charging higher margins, but it's the turnover. So let's say there's a grocery store which has a loan of 45,000, and that individual is turning over the stock twice a month, and the margins are, let's say, 5 to 8%. I think the annual rate after twice a month of turnover comes to somewhere between 120% to 150%, right? And microfinance institutions are charging much less. I'm not saying that it's not important for those poorer individuals to save or to have more funds, but what is more important is to generate that amount of returns.
Right. We were speaking before the interview, the rate is approximately 35%, which is significantly higher than what you pay on other loans, which is 17% or whatever.
Yes.
However, the reason you told us behind that is the cost of actually giving out these loans and the due diligence, and a much larger number of loans. Please elaborate a bit on that.
So a commercial bank giving 100 million to one corporation or 50 million to an entity, in microfinance you need to disperse 1,000 loans if you want to reach 50 million of the portfolio. So the due diligence, the the paperwork, the regular interaction with those individuals on monthly basis, and this is without collateral. And over and above that, the microfinance plus aspect that I was explaining earlier, the training of the farmers at time, in order to enhance the yield, that also costs.
Is there a risk element built into this as well?
Certainly risk element is there, because this is a clean loan. I don't like to compare it, but how much does a normal commercial bank charges on a credit card? It's around that, 30, 35, 36%. It's a clean loan, right, without any collateral. So at times we become defensive in microfinance that, oh, no. I think that I'm not saying that this is the kind of markup that should be charged to poorer segment, but this is the reality, and we need to face that reality. The economies of scales would kick in, the technology aspect would kick in, and ultimately the rates would reduce. But currently, I think these institutions also face then a lot of risk. So in COVID, if an institution is losing 5 to 10% of the portfolio, it can only manage those kind of defaults. Otherwise the default rates are not too high, but in these circumstances, so it has to bear those losses.
Absolutely.
And these are built in. I mean, previously money lenders used to charge 80 to 100%. And the kind of relationship between the borrower and the lender, I think we all are aware of that at that point of time. Or even now, currently, even now in villages, money lenders charge 80 to 100+%, right? Which is totally not justified. Even 35% is not justified. But I think in order to sustainably provide financial services, this rate is, I feel, not unjustified.
Right.
And it should reduce, and I hope it is going to reduce. We are also making effort on that, in that. But the kind of services, along with the funding that these institutions provide, really contributes towards the lives of these individuals. And that's why we meet clients every now and on our every visit, who have taken loan 5-6 times. Now people would say, oh, okay, you have made them your slaves, and you're just providing them loan each time. I mean, tell me a big corporation who has not taken a loan since their inception. ICIs and Unilever and all of them have taken loans since maybe 40-50 years, or since they've been formed.
Right. Let's talk now a little bit about the social impact of these programs. We know, okay, it's costly, whatever it is, but it's a game changer. It changes the lives of people who previously did not have the funds to run their own business. And we've talked about women, there's also youth and subsistence farmers. So please elaborate on this a little bit.
So what we have found is that if you work with these farmers, you train them, you provide them better quality seeds. So one of our programs that we did resulted in almost 25 to 30% increase in yield. Right. So we are currently working on a large renewable energy program, right? Especially in those areas which are off grid or poor access to electricity, and it also has environmental impact. These kinds of products and services have large impact. So if you have electricity, and we all know women can work even after in the evenings, children can do their homeworks, and we've seen that across the country, how that changes. Also our specific focus is on providing financial services to women, and as I said earlier, 85% of our portfolio is with women.
What type of businesses do they have?
They have multiple businesses. As I said, livestock is a big kind of portfolio. Then low-cost private schools. Many women are running low-cost private school, and these schools do. Not only those women, but there are thousands of teachers that benefit through the employment. Then salon is becoming a big business across this country, and you'll be amazed. I was in a small area, and they said, in this small area there are like 10 women who have taken loans for salons. Also trading. Number of women do different kinds of trading, right from clothes to commodities. Also, then women are involved in stitching, especially the whole wedding related value chain. They are involved in that. Now you also find women, I mean, they have taken loans for motorcycles.
Wow, for their own transportation.
For not only for transportation, but also for delivery of food. For McDonald's and others as well. I mean, for other food pandas, and I hope it's not going to advertise, consider as advertisement. But that's the kind of even I've seen a couple of women in Layya. You would be amazed. Who has taken loan for a motorbike.
Wow.
And she is riding it there. Brave woman. And so these are some of the businesses.
And what about the youth? How are we supporting the youth in microfinance?
The youth are normally, becomes a difficult kind of client because of the reliability. The kind of single-mindedness, and when once you reach a stage, it is considered. I mean, that's the perception. But we have found that some of these are doing very innovative job. They are normally much more enterprising.
Yes.
They are across the board. I mean, right from small stores to driving motorbikes for this delivery, and rickshaws, and I've met a few young people who are running their own schools. And as across the world, I think these millennials are more into doing their own businesses, small food store or restaurants or cafes, rather than working for someone else.
Absolutely.
So,
and they're creating employment.
Exactly.
And sort of, right?
They are.
Independent and self-employed.
See, not everyone is an entrepreneur and not everyone is enterprising. So if you get a good entrepreneur, you can certainly, I've seen, 8, 10, 5 people are employed because of that entrepreneur.
Right.
So you need to identify them. That's what our organization do, and we set specific targets for lending to youth.
Okay,
So,
right. And your PMIC also is supporting the SRS program with the graduation aspect of the program, which is when the people actually stop getting handouts and are becoming financially independent. So that is a very critical element of the SRS program. What is your role in this, PMIC's role?
So we do not have a direct role, but with Pakistan Poverty Alleviation Fund, which is our largest shareholder, what we have designed is working with these microfinance institutions in order to graduate the beneficiaries of BISP program and also of other livelihood programs that the government has done. So up till now we have brought these individuals who wanted to increase their businesses through the livelihood programs, which they started through livelihood programs or the BISP clients. Almost 30,000 clients have now become clients of microfinance institutions,
Right.
and they are doing their businesses. There are women, there are men as well, and their lives I've met a few people who have graduated. I mean, there is now much more hope in them, and
That's fabulous.
yeah.
And how about sustainability? PMIC is also working on that in these programs, sustainability, and you've also brought about some innovation. Tell us a bit about that.
So sustainability, I think, is important for any institution, right? And for the microfinance institutions, what we did was we gradually increased, their sustainability. Banks are, the microfinance banks are sustainable since their inception, but as these institutions build their equities, we brought their lending rate to more market-based rates.
Okay.
That was done in PPAF, and because I think if you grow in size, you can hire good quality management as well. And if you grow, only then you can hire good quality management. And in order to, bear those fixed expenses or administrative expenses, you have to, or you can only bear them when you are sustainable. So these institutions have approached not only taking loans from PMIC, but also taking loans from commercial banks. They are growing at a good rate. They have built their management. And sustainability is not only, in my opinion, profitability. It's also, having a stable institution in the long run with stable management, with
Sure.
good bottom line, and with stable kind of clientele.
Right.
And so even in PMIC, we are not looking for, our shareholders are not looking for very high rate of returns, because in the long run those we also feel don't work. So we need to have ample rate of returns in order for the organization to keep on working sustainably, but that also benefit our ultimate clients.
Right, okay. And you also mentioned that COVID-19 now hit us last year, sometime around March, April. That had a huge impact on this industry. So how did you overcome that? What did you face?
No, that was a very difficult time. I think when COVID started, every one of us, it was a fear of unknown. Nobody knew what to do. Even the masks were not available. The sanitizers were, and we didn't even know what to do. The same was the case in the financial sector, in the microfinance sector. So I think we sat down, we looked into the situation. We also interacted with the regulators, and regulators were very, very forthcoming, and they allowed for deferments in payments. Mm-hmm. And immediately by, I think, April or May, we went to our board, and our board is a very, we have a very experienced and professional board members. They looked at the situation and of not only our clients, which are the microfinance institutions and bank, but also our ultimate clients, for which this organization is made. The poor clients of microfinance,
and their businesses were hurt at that time.
They weren't hurt. They were closed.
Closed,
at that time, nothing was happening. In I think March end, it was complete lockdown. So we deferred the payments for a year for all of those institutions who approached us.
For 1 year. Okay.
For 1 year, and this helped them in deferring their installments of the ultimate clients, and that gave them breathing space. Those microfinance institutions, and also some of them also started, some charity work from the profits that they have earned. So people, just to go back to the markup rate, but then at difficult times they also go back to their clients and to their community to help them with food supplies and all of that.
Right.
So that helped the institutions in stabilizing their cash flows and their liquidity position. That helped them in keep on paying their staff members, which are in thousands, salaries and other things. And then ultimately, when the things improved, the clients were cognizant of the fact that these institutions have helped them, and based on that, these clients have started repaying these institutions.
Right, it's a huge relief. Everybody needed it at that time, yes.
And other than maybe one or two sectors, such as low-cost private schools, which are still in difficult situation right now, the rest of the clients have started repaying to microfinance institutions and banks. However, the situation is not, still at a level where these institutions have started of growth, and I think it will take a couple of more months
to get right back on track where they were before.
So they are now in control of the things, but like any accident or a scare of an accident, what you do is you first get back into the control, and then you start, increasing your speed. So I think they have reached the stage of controlling their institutions, and I think they'll take another a couple of months to start.
Right. And this is a phenomenon that's all over the world right now.
Exactly.
It's not just here in Pakistan. So to conclude this very interesting and informative interaction with you, I wanted to ask you, where do you foresee the future of PMIC, the work that you do over here, and particularly this microfinance industry in Pakistan, say for the next 5 years?
You know, as, on the side, I mean, I never like predicting, right?
Mm-hmm.
And it is prudent not to predict in this world, which is so full of uncertainties, and most of these are not into your control. But what I see is, you know, further growth in the sector, introduction of new products. I would also like to see, you know, better compliance, risk management systems within these organizations after COVID, because when you're growing, when everything is fine, you don't think about those things. But when it hits you, you start, you know, thinking, oh, okay, you know, we shouldn't have been too leveraged. That might have saved us. So I think technology is going to play a big role in reducing the cost, and it should. But I still don't feel that we have reached a level of sophistication in artificial intelligence where we should solely base our lending, especially to the poor people of across the world, through machine-based lending. Because, you know, actually these poor people are also technologically excluded. They don't have, you know, those sophisticated mobile or other data points from where you can assess their credibility or form models. So I think technology is required for the operational purposes, for repayments and disbursement, for bringing efficiencies in those areas. Also, I would like, I think there would be more institutions, and there should be more institutions, more innovative institutions.
Okay.
I also see some penetration of financial services in Balochistan and improvement in KP. And certainly I think there is a huge room. As I said, you know, only 1/3 approximately have been served, and there's a lot of room. For PMIC, I think we see ourselves as an important player in the sector. We'll remain an important player. We will be working on capital markets development for the microfinance sector. Like I said, you know, the social impact fund that we have launched, I see it growing in the near future. Then also, you know, more bonds, more supporting the new institutions would be something that I see as our role. So these are some of the things that we'll be working on, and we are also working on a challenge fund for you know, new innovations and products.
Great. Well, we wish you the best of luck in your
Thank you so
efforts going forward. This industry and what you're managing is huge for Pakistan, especially when it comes to bringing people out of poverty. So keep up the good work. Thank you so much for joining us. We had with us today the CEO of Pakistan Microfinance Investment Company, Mr. Yasir Ashfaq. Very, very enlightening and informative discussion with this gentleman, because we get an idea about this industry in Pakistan and how it contributes to uplifting people out of poverty by giving them affordable loans and giving them access to capital, financial inclusivity, which is so important for our youth and for our women and for just generally people who are in the low income brackets who otherwise wouldn't have access to this kind of capital. Thank you for joining us on our program today. We will see you next time at the same time, same place, same show, Sky's the Limit on PTV World. Bye-bye for now.